So hey guys, welcome back. In today's video, I'm going to talk about which liquidity is more likely to be targeted when you're trading, uh, and how do you mark up those liquidity points. So let's begin. So here is the USDT charts on forex.com, and I have marked up my highs and lows of Asian session. And for those who don't know Asian session time, it's 22 midnight open. So here is the lowest low of that Asian session, and here is the highest high of that Asian session time period. And when you see this type of price action, and you have a bias, suppose this specific day we had a bullish scenario on market. So what did price do? Price first took the low of the Asian session after the markets open. You can see here is the midnight open, and it created the low on London session, and after it has taken the Asian session low, it went to take the Asian session high. So, and it also created a fair value gap on New York kill zone, and then it took that Asian session high. Next one is the London session highs and lows. So how do you mark up those London session highs and lows? So you want to put a vertical line on 1 to 5 a.m. on your charts, and then you mark up the highest high and lowest low. So what do you see here? Market at 8:30 a.m. market opened and took those London session low, and then created a fair value gap on what time? On 10 to 11 a.m. and then took the London session buy side. Okay, that's the highest high and that's the lowest low of London session, 1 to 5 a.m. Okay, so what do I mean? I mean, when you have a daily bias, you want to see the opposite directions liquidity to be taken first. For example, here the London session lows taken first on 8:30. News release at that time on for Forex. The markets open at that time for Forex, and it took the London session high, shift in market structure, and took the London session buy sides. So this session lows or highs is likely to be more drawn for market. Next one, you could see same. Here is the London session buy side, London session highest high, and here is the London session lowest low. So again, market at 8:30 market took those low, created fair value gap, and took those London session buy side. If we look at another example, so here is the New York session high and New York session low marked up, and the time frame is 7 to 10 a.m. for a New York session, and I use those time periods 7 to 10 a.m. 3-hour time period. So what did market do? Again, market at 9:30 market took those low, created a fair value gap, and then you could see, though it's consolidated for a long time, but it gradually took those New York session buy side. You could see that clearly here. Another example on 15-minute chart on GBP USDT. So here is the New York session low, and here is the New York session buy side. So you could see the timeline 7 to 10 a.m. So this spike didn't took the New York session low, but here at next day's London session, market took those low. What low? The New York session low of the previous day. Then market took the New York session high. You could see what a beautiful run up there. Again, same. Here is the New York session low taken, market structure shift, created a fair value gap. You could have entered there, and it gradually did took the highs of New York session high. Again, here is that same scenario, and there's a twist here. So we know that this low has been taken, okay, at that day. So what liquidity resides? The New York session low has been taken, but the New York session high hasn't been taken yet. And we can see here also the Asian session high it's not been taken, but the Asian session low has been taken. So in my mind, I know that price is not gonna go down there because it already took the New York session low. Okay, and I had a bias of bullish, and so I know that price gonna go up from this fair value gap to the Asian session high and then New York session high buy side. Okay, see how perfectly price respected those fair value gaps. And then another example. So here we have the lunch hour macro. Lunch hour session, lunch session of 12 to 13. I use 12 to 13. You could use 13:30. So at in this time period, I marked up the lowest low and the highest high, lunch hour high buy side and lunch hour lowest sell side. So what did market do? Market first took the lunch hour sell side and then went to take the lunch hour buy side. Then it came down. You could see. So you could take these trades on 1 minute charts. I would prefer 1 minute charts because it secure 10 pips or 15 pips for you. Not every time, but most of the time you could get 10 or 20 pips. Again, here is another example of lunch hour high and lunch hour low. So the time frame I already told you is 12 to 13. So here's the low. It has been taken, and we can see, and we know that it's not gonna go down there. Why? Because lunch hour high hasn't been taken yet, and also price has taken the Asian session low already. You could see, but it didn't go low of this low what took the lunch hour sell side. So I know that price is gonna after taking this Asian session low, price is gonna go up to take the Asian session high, even if it's gonna go down. But this on this day, we though has had a bearish bias, it still took that lunch hour high. You could see that then it go down, and went for the lower objectives. You could know that this previous weeks was a bearish week, not bearish, I would say inside range. So you could see that this lunch hour highs or New York session highs or London session highs, and preferably the Asian session highs or lows is likely to be targeted most of the time. And I use only this for session highs or lows liquidity because where I'm from, I cannot trade the PM sessions. That's why I only use this for. But you can use PM sessions also. So that's how you're gonna mark up your chart. You need to mark up the highest high or lowest low within those sessions. That's how you're gonna find those liquidity spot, and go to your own chart. Do this. You will see that most of the time, after taking the sessions lows, market go for the sessions high to be taken, then go to its direction. And the more you're gonna practice it, it's gonna be more what can I say? It's gonna be more clear to you. and I see already have video on this on his channel. You can also check that out. But this one is for my audience. I hope you found this video helpful. Give a thumbs up and yeah, subscribe to my channel. And last thing I want to say that yeah, stick to your trading rules. Don't change your trading models first. Okay, stick to one model, because there's a plenty of model in for ICT students. Practice one model that's gonna give you the most. If you fail one time, okay, even if you fail multiple time, but there will be a time when you're gonna unlock that, and that one setup's gonna be suitable for you. So until I see you next time, be safe and stick to your trading rules.